Do you want to invest like a pro in Bitcoin, Ethereum, and stocks? Then you have come to the right YouTube channel. On this channel, you're going to learn how to invest slowly and steadily to build your net worth with dollar cost averaging strategy. A bit about me. I've been investing since 2017 in stocks and crypto, and I've had my fair share of making and losing money, and I want to share my experience with you guys. There are a couple of myths I learned from my friends who are investing. The first one is, well, I don't have enough money. How would I invest? It's a myth. You can invest with as small as $100 per month and make a lot of money at the end of the decade. The second myth I heard is, well, I'm not feeling lucky. Investing is not about feeling lucky. It's about getting into stuff that's going to potentially have higher value in the future. And that's why you will be building your net worth slowly and steadily in the future, versus buying and selling very fast, thinking if you're lucky, you will be a millionaire, and if you're not lucky, then you will be losing money. And on this channel, this is what we're going to talk about. Okay, let's go through the 4 rules I learned about investing. I call them golden rules. The first one is know what you're investing in. Don't invest in something because your friend told you to. What if your friend is wrong? What if he doesn't understood and someone else told him, right? So always know what you're getting into. It will give you enough confidence to do long-term investing. The second one is risk versus rewards. If you're investing in something risky, expect a high reward. Otherwise, don't invest. If you're getting 10%, why to take that risk? If something is less risky, don't expect you will be making 10 times money. So if you're investing in Google stock, don't expect that you're going to be getting 10 times returns in a year. It's already a well-established company, and the growth will be slower compared to other riskier assets. The third one is diversification. Don't put all your eggs in one basket. If you lose that basket, everything is gone. So some people say, hey, all in on Bitcoin, I'm going to be a millionaire in 3 years. Well, bad strategy, because, what if it doesn't work? Ideally, you should be investing in multiple assets. So even if a couple of them fail, the other ones should be able to cover those losses. Not only that, it should give you so much of high returns that, your portfolio will be doing fine, even if after a couple of failures. The fourth one is being disciplined without being emotional. This is the most important for long-term investing, because if you are always being emotional, the price is going high or low, you will be thinking of buying and selling all the time, and it will not help you in the long run, because you'll be making a lot of losses and so forth. Okay. One of a really good quote I learned from George Soros, it's not about being right or wrong. It's about how much money you make when you're right and how much money you lose when you're wrong. You should keep telling yourself about this quote. It will really help you. All right, before we get into what's Bitcoin and Ethereum, I want to explain the concept of centralized internet versus decentralized internet. Let's take a simple example of Alice wants to send money to Bob. There is going to be a central entity that's going to control that transaction. It's going to decide how much time it's going to take, how much money, and if it wants, it can also cancel your transaction or block your money. The central entity could be a bank or PayPal. But this is the kind of internet we'll live in, the centralized internet where a lot of power is given to one or few entities, right? In the case of Bitcoin and Ethereum, they are trying to change this game by introducing you to decentralized internet. Now, what is a decentralized internet? Well, decentralized internet is a bunch of computer programs running similar programs. So in case of Bitcoin, it's going to be a Bitcoin program, and in case of Ethereum, it's going to be an Ethereum program, right? And as you can see, there are multiple entities here now. So there's not one person taking the control of your transaction. It's going to be multiple computers. It's a whole network, right? And because of this, it's hard to, cancel your transaction, because majority of the computers have to say no. So if someone wants to control Alice and Bob's transaction, they have to control majority of the, computer programs. And as you can see, if these are like hundreds and millions of computers, this is going to be harder, right? So the other concept I want to introduce here is Bitcoin as a network and Bitcoin as a currency. And same thing for Ethereum. Ethereum is a currency as well as a network. And they both are dependent on each other in the sense Bitcoin currency needs this Bitcoin network as well as the Bitcoin network needs this Bitcoin currency. And this is true for Ethereum as well. And in upcoming slides, I will explain a little bit more in detail, but in simple words, Bitcoin is just a peer-to-peer transaction network. So Alice will be sending Bitcoin to Bob. In case of Ethereum, it's much more than that. All right, and we can come back to this in the upcoming slides. Okay, now, so then let's take the first question, which is, what is Bitcoin, right? Well, Bitcoin is a decentralized network as well as a currency, as I explained, and it allows peer-to-peer transaction. So, Alice may say, hey, I want to send one Bitcoin to Bob, and that would be person to person without having any central entity. If you remember that diagram, this is going to be a network, right? This is a whole network. So when Alice sends Bitcoin to Bob, all these computer programs, these are basically Excel sheet that. So if we take an example, Alice is sending one Bitcoin to Bob, and to begin with, Alice has 10 and Bob has 1, let's say 0. When the transaction is done, after that transaction, now Alice is going to have like 9 and Bob is going to have 1. And all these computer programs you're seeing in this network, they're going to know about this transaction. And it's just, as I said, just an Excel sheet. Okay. Now you might ask, why Bitcoin has value, right? Why anything has value? Have you thought about that question? Anything has value because people believe it has value. Back in the day, there used to be precious stones which were traded for goods and services. So as long as Bitcoin has adopters and users who believe it has values, it's going to have value. The other question that might arise is like, why we need this new money? The biggest reason for me is like having a true global internet currency. So if we take an example of Alice and Bob, Alice is in the United States and Bob in Europe. When Alice sends US dollars, it's going to be converted to euro and Bob because that's how we do transactions. It always gets converted into our local currencies. In case of Bitcoin, it's going to be the same currency, and that's why I call it like global currency. When Alice sends Bitcoin to Bob, it's going to be Bitcoin and not something else. All right. The second reason to me is fixed supply. It has a total market, total number of Bitcoins are always going to be 21 million. It's never going to be more than that. So, as long as the number of adopters keeps going higher, considering the limited fixed supply of 21 million, the prices should be going higher as well. And it's a very important point because you're investing in something because you're expecting the prices to go higher eventually. All right, now let's go through Ethereum. What is Ethereum? Ethereum is a decentralized network that runs decentralized applications. So in that diagram, I told you that Bitcoin is basically just a simple Excel sheet, but in case of Ethereum, it's going to be a complicated program. So here, this and every other computer in that sense, this computers could be running a simple program like an Excel sheet as Bitcoin, or it could be a complex program like a salary manager. So let's say Alice is the boss of Bob, and Alice says at the end of the month, Bob should be receiving some salary, right? So Alice will deploy that program on this computer or use someone else's salary program on this computers, which is an Ethereum network, right? And this network will say, okay, it's end of the month. Let me send some money to Bob. So you can see that is like a complicated condition here, right? And it could get much more complicated, like a Twitter or like an Instagram application. So this is truly a new internet with a different types of application, and that's what Ethereum is trying to achieve. It's different than Bitcoin. Bitcoin is simple. It's just an Excel sheet, and it's a peer-to-peer transaction between two people of Bitcoin, and that's pretty much it. In case of Ethereum, it could be much more complex, as I just explained. Okay. Now, the second question would be again the same, why it has value. Well, if you think of those applications I said, Instagram or Twitter or Facebook or something like PayPal, they all could be deployed on Ethereum network. And as long as there are more applications and more adopters using the Ethereum network, how do they run Ethereum network? They need the Ether currency, as we said, network versus the currency. And that's why the value will go up considering the relative limited supply. This is important because Ethereum doesn't have the fixed supply like Bitcoin, but that's a topic to discuss in some other time. But it's relatively fixed in the sense it doesn't have crazy inflation. And that's why as long as the supply is outperformed by the demand, the prices should be going up. And the last question would be, why do we need this new internet? Well, the biggest reason is transparency. In this current world of banks and other applications, they basically hide the rules and there is no transparency for the end users. With Ethereum, all these applications are open source in the sense anyone can see this transaction and it will be completely transparent for all the users who are using it. Okay. Um, Now let's talk about the concerns with investing in Bitcoin and Ethereum. These are like top questions from different podcasts, debates, and even my friends asking me the questions. And from my understanding, I want to list them out and give my answers so it gives you more confidence to invest in Bitcoin and Ethereum. Okay. All right. So the first one is, it's not a company or a stock, then why should I invest in it? Well, when you invest in a stock, you're getting some ownership of the company, right? When you're investing in Bitcoin and Ethereum, remember that thing we talked about, the network versus the currency? The network doesn't run without the currency. So when you're investing in it, you are buying that currency that the future adopter is going to require because he believes a little bit more than you, so he needs to buy your currency. So you are getting a share of the network, right? And that share, as long as you have more share, someone else will be willing to buy your share, and that's how you'll be making more money. All right. Second one is, it's too volatile. Well, it's true, it's very volatile, and that's why we are introducing the DCA strategy versus like buying and selling all the time like traders do. And something that's too volatile, it's very dangerous to trade. Yeah, most people lose money. Around 10% of people who are successful traders. So anything that's too volatile, it's actually very dangerous. And that's why we are trying to invest in a slow, steady manner to, actually negate the volatility. All right. The third one is governments don't like it, what they pay in it. Well, as I showed you in that diagram, it's a decentralized network in the sense it could be, these computers could be running in different countries and so forth. So if governments want to ban it, they have to ban in every single country, or they have to turn off the internet, which is an unlikely event. Could it happen? Sure, but it's a very unlikely event, right? The fourth one is, it's just a technology. Doesn't old technology always get replaced by a better one? That's true, but again, you have to understand there are two things here. One is a network, those computer programs we talked about. And then there are people who are using that network, people like you and me who are buying the currency, but we are not like supporting the network. We are just buying the currency, right? So any new technology would have to find two types of people. One who would be buying the currency and the other ones who would be supporting the currency through that network. And because it's a chicken and egg problem, it's very hard to do. We already have the currency that is faster than Bitcoin and Ethereum, but they don't have enough adopters. So Bitcoin and Ethereum are in that early uh, uh, early adopter game, and they have more adopters than others, and they are more decentralized. So it's very hard to replace them. Okay. The fifth one is how do I value Bitcoin or Ethereum? In case of stocks, you have like certain financial information, and that helps you to say whether the value is fair or not. It's true. Bitcoin and Ethereum don't have like solid models. However, Bitcoin has now data since 2008, which can help us to figure out what could be fair value or not. And that's something we'll be discussing on this channel as well. The sixth one is it's not that fast. Well, anyone remembers how slow the internet was in 2000, early 2000? All this new technologies, they are initially slow, and eventually as more money comes into the system, ecosystem, and more developers develop they end up becoming faster. Okay. All right. So now let's get into what's DCA. Well, DCA, if the full form is dollar cost averaging. And the strategy is very simple, as you can see in this diagram. At regular intervals, you're investing fixed amount of dollars, right? Where I'm highlighting, and your goal is to keep this average price, this dotted line, as low as possible, and you are negating this volatility. And what happens if you keep buying? As you can see in this blue area, the number of shares keep going higher, right? And then at a specific time, it will be selling. But your goal is to buy more and sell less, right? And this is what we are going to be discussing in this, on this channel as well. Okay. I took a snapshot of Bitcoin and US dollar chart, and these are the two things that I want to explain: the safer time to DCA and the riskier time to DCA. The safer time to DCA would have been when the price was already crashed and you are consistently buying, and then you will wait for this area to sell. This is going to be very fruitful, obviously, right? But if you ended up being in this area and then you sell somewhere around here, because the price is consistently falling, your strategy is going to be not successful, because your price will be much lower than the prices you bought for. So on this channel, we'll be adding value to show you how to DCA, when to wait actually, and not even just do anything. Okay. All right. Now, I ran some stats on DCing on Bitcoin in a tough period. If someone invested, let's say, $1,000 monthly from November 2017 to 2019, even in a tough period, there was some profit, as you can see. And if that person did it weekly, right, even then there was some profit. That person didn't lose money. This is happening because you are negating the volatility. You're buying more and you're selling either just in one shot or slowly. Okay. And if that same person actually did this, follow this strategy for a four-year cycle, then this would have been much profitable. So as you can already see, if monthly done from June 2017 to June 2021, $1,000 invested per period, the profit would be staggering $810,000. If that same thing done weekly for the period, the profit would be $3.4 million. All right. So it's very important when not to do anything and when to consistently do it. And we can even amplify this. This is what I learned over the last few years. With sudden time, you actually become aggressive. And I'm going to be talking about this in the future videos, but just want to throw that out that, it's a very, very powerful long-term investment strategy. Okay. Now, how this channel would be adding value to you guys? Well, first of all, how to DCA. As I said, there could be one simple method of every week or every month you'll be doing it. But again, you got to know the tough period versus, easy period, right? This channel will be adding value to help you smartly DCA versus just doing it every week or month, okay? And then the other thing you would probably like to know is like what to DCA into, because I assume most of you are either working or having some sort of business. You don't have time to research hundreds and thousands of stocks and crypto. So this channel will be carefully picking them and showing to you guys like what to invest into. The other thing I would like to do is doing a regular portfolio update, so you exactly know the growth of the portfolio of both cryptos and stocks. And I'll be showing all the transactions, so you can also see how I'm doing, and that should hopefully give you enough confidence of investing. And the last thing is simplify updates. This is also very important because a lot of YouTubers I follow, they use really complicated indicators and so forth. I think what most of you guys would be interested in is understanding what you're investing in, understanding the why, and then when to get in and when to get out, right? Also, the third thing, when to do nothing, right? And I want to simplify that process. I don't want to keep things very complicated or boring. I want to simplify that process for you guys so I can save your time as well. I thank everyone for watching this video. It's a new YouTube channel, so please share, subscribe, hit the like button, tell your friends about it. Nothing on this video is a financial advice. This is for a purely educational purpose. I'm trying to build this community of the people who are interested in long-term investing. And I'll see you in the next video. Thank you.